In today's ThinkScript tutorial, we're going to be building our very own seasonal analysis indicator for ThinkOrSwim. Now, this data you may have seen on third-party websites as an example. This is what most people have to use when trying to perform seasonal analysis. They have to go to a different website. That website usually tracks a handful of markets, and it gives you an overall range for what's happened in that particular market, in this case, over the past 20 years. The data metrics that you have at your fingertips are things like your percentage return, how often this happens. You can also see that in a visual format on this chart. If, for example, we use September and October as an example, you'll notice September, October for the S&P 500 usually slightly more bearish. However, the setback here, the shortcoming, is that you're limited to a third-party website and only the markets they track. You don't really have an idea of how this tool calculates the data, how it goes about making any of these calculations. We're going to fix all of that in today's tutorial and end up with a seasonal analysis indicator, which gives you very similar information, except this time you can control which markets you'd like to track, you can control the type of information you'd like to track, and really that then opens up the entire universe of possibilities that you have that you can start to use seasonal analysis in your trading. Now let's use the S&P 500 first as an example here. The 2 months that we had just talked about were September and October, and you'll notice that the labels here are yellow compared to in other parts of this market, they're green. What does that actually mean? Well, if we start off at the very beginning here, January, 60% of the time, we close higher than we opened at the beginning of the month of January. Now, what does that average gain look like? Well, in the S&P 500, that's usually a gain of right around 2.83% on average, and this is tracking the past 5 years. So instead of being forced to use only 20-year data, you can start to control the time frame as well to understand a little bit more about what have the trends been more recently, along with, say, if you did want to go back all the way 20 years, we can switch this right over to 20 years, and now you have that data available to you just in a few clicks. You'll notice in the past 20 years, October suddenly starts to become a green label where 65% of the time we close higher at the end of October than we were at the beginning of October. However, the average gain there is right under 1%, so nothing too noteworthy. However, this gives you an idea of what that data looks like. Now, for this exercise, let's focus in on the 5-year period, and instead of the S&P 500, let's change this to something completely random, something like, say, the stock of Procter & Gamble. Now, if you were to try and find Procter & Gamble seasonal analysis here, you wouldn't really be able to do so. You may be able to come into the consumer staples sector and use that as your baseline for analysis. However, you can't really narrow down on a particular stock. Well, now, using this indicator, you can. So for example, if we come in now to Procter & Gamble, same thing, 5-year analysis, you'll see for the month of January, 60% of the time, we close above where we started. However, the average gain there is negative. So the label shows up as yellow, letting you know that, hey, this month doesn't really give you any sort of edge. Now we move on to February, that number drops down in terms of the average gain to negative 3.07%, and only 40% of the time do we actually close above where we began at the beginning of the month. Now, once we switch over to March, you'll notice the label turns green. And in March, we have that first glimpse of our positive percentage gain with a 2.32% gain compared to where we started at the beginning of March, again, over the past 5 years. Now we keep moving on. April, negative as well. May, negative as well. Now we come into the summer months where June, July, August, and September all have green labels. Now let's try and find which is the strongest month for Procter & Gamble in these summer months. Well, we can do so quite simply. One, we may want to focus on places in which 100% of the time we close higher at the end of the month than where we were at the beginning of the month. That takes us to July and August right here, where you'll notice that first number is 100%. So great, we have some sort of knowledge there. Now we'd like to find out which is the stronger of these 2 months. Well, that's where the second number gives you a very clear advantage, where Procter & Gamble for the month of July on average closes up 6.05% from where it begins on July 1st of that particular year. Now, if we move on to August, that number drops down to 2.83%. So still positive, especially when you compare it to things like January and February. However, that number does drop down. So now using all of this analysis, if you wanted to find one particular month where, hey, I should be focusing in on Procter & Gamble, well, you know that's July, in which 100% of the time, at least for the past 5 years, we've closed higher than where we began at the beginning of that month. And then in terms of the average gain, that's been an average gain of 6.05%. So that's the level of power that this indicator gives you. No more needing to go to third-party websites, no more needing to scour through data, no more needing to deduce based off of sectors. You can narrow down on the very particular market you'd like and get the information. Now, very similarly here, if you wanted to switch this over to an ETF, You could come into XLP. That gives you the same level of data as well. This time in XLP, you'll see July, similar thing. 100% of the time, July's close above where we began. The average gain there, 3.15%. So you know Procter & Gamble outperforms XLP in the month of July, at least traditionally for the past 5 years. Now, if you want to switch this over to futures as well for all of our futures traders, this is supported with future symbols as well. So let's come into something like, say, the S&P 500 futures. You'll notice this tracks very similarly. So regardless of the market, regardless of the asset class, you now have seasonal analysis information available to you at your fingertips, and that's the indicator we're going to be building in this tutorial. For those of you that would like to skip the tutorial, the indicator is available for download and the link is in the description box below. It's completely free. The only thing you'll need is a free account to sign up, and you can go ahead and download and import the indicator into ThinkOrSwim. All right, so with that, let's get started with writing some code.
So we'll click the studies icon and then click create to create our study. Now here I can give this the name TI seasonal analysis. And now we can get started with writing the code. And the way we'd like to do this, again, remember, is being smart with it and using month codes so that we have to write the code once for, say, January in this case. And we can then lift and repeat that same code for February, March, April, so on and so forth. So starting off here with January 1st, the first thing we'd like to do is obviously define January. So let's first write a comment here and we can say January. And now let's define this month with something like def jan is equal to get month. And we'd like to see if that's equal to 1. And that's just a function that thinkorswim gives us, get month. And the value 1 correlates to January. So now using that, let's actually test this out. So we can say add chart bubble. And now we can say, show me a chart bubble only time we have the month of January. Plot this on the close, print out the value Jan, and then make this a yellow chart bubble. And so now once we click OK, what we should see is a chart bubble plotting on every single day of January. Let's see if that's what's happening. Click OK. Click apply, and you'll notice you have this cluster where every single day inside of January we have a 1 plotting, which is the value of January. And that stops on January 29, and the next candle here is February 1st. And so now we know we've defined the month January correctly, and we can repeat the same process for February, so on and so forth. But for the time being, let's comment out this chart bubble code and continue writing. So now that we know we have January, we'd like to know what the open of January is and store that as a value that we can continuously reference in the future. So let's say something like def jan open, and we'll say for jan open, if today was January and yesterday was not January, then we'd like to know what the opening price is, implying it's the beginning of the month. Else, we'd like to carry the January opening price from previously. So that's going to be Jan open. Then we also need Jan close, and we can test this in just a second. But Jan close is going to be something similar here, except we'll say if today is January, and this time tomorrow is not January, which is what the -1 is referencing, then in that case, we'd like to have the closing value, otherwise have the previous bar's Jan close. So now let's go ahead and test each of these values to see if that's working the way we expect it to. So we can say Jan open, and here we'd like to plot this for all days in January. Plot me the Jan open value in those chart bubbles. And this value should be the same for each cluster. So here, for example, if I hover over this candle, you'll see the open 375.31, and that's the value these bubbles are continuously carrying over all the way to the very end of January. And if I come into a different January here, you'll notice this is the beginning of this year, which is 323.54, which is also the value that the bubbles line up with. So now we know we're tracking the opens. Let's test the closes as well. So Jan close, click apply, and here you'll notice the close value is changing all the way until the final day of the month, which is when we actually have it, and that close value was 321.73, which is the chart bubble that we currently see plotting. So we know that the opens and closes are plotting the way we expect. So now we can continue moving forward with defining now the difference between these, along with then calculating ups versus down months and all of that good stuff. So now we can say something like def jan difference, or actually let's say Jan diff to keep this short, and we'll say if, now you're at the end of the month, so same as our close, so if today is January and tomorrow is not January, whoops, then what we'd like to have is our Jan close minus our Jan open, and we'd like to see this as a percentage, so we can take all of this and divide it by our Jan open to have this really as a percentage form and plot it in that value. Else we can say something like 0, or just return the value 0, excuse me, as the difference. So now if we continue testing the same way we have, if we test out Jan diff, click apply, click OK. It's the last day of the month that we care about. And here, for example, we're seeing that between the close and the open, we've had a move of 5.25% or 0.0525. And now let's test that out. So using our open here in the SPY, using our close here, 5.25%, you can see that in the little bubble that's plotting towards the beginning of the candle. So now we know our difference is working as well. And this is currently stored in a decimal format, but whenever we output it inside of our labels, we can change that to be a percentage format. That's just a formatting thing, and there's a function called as%, which will help us do that. Now that we know our difference, the next things that we can start to do is start to parse this data into different chunks. So the first chunk that we have is our up months. So we can say something like def Jan up, suggesting that it's an up month. And there we'd like to know the total sum of all the places in which, if today it's the last day of January, so again, Jan is today and it's not January tomorrow, and our Jan diff in this case is above 0, then 1, else 0. So before we define the down, the way we've said is take the sum of every single place where if today was the last day of January and the close was greater than the open, then that value is a 1, meaning that there can only be one value for the month of January, and this value can only contribute a +1 if it's an up month. Otherwise, it will just add 0, which essentially means it carries over the previous value. So this is how we collect all of the up months, and we can repeat the same thing, but now for the down months as well. So we can say Jan down, and this time we're looking to check the total sum of, again, if this is the last day, but this time instead of our difference being above 0, we'd like to see if it's less than or equal to 0, then we're going to go ahead and add 1. And now that we have both our ups and our downs, which includes our equals to as well, we can now define something like total January. And here we can define a variable that, again, starts off with Jan, and we can say something like Jan counts. Right? And so that's just our total count of all of the Januaries that we have. And there we can say something like, again, total sum. And one more time, we're going to be copying and pasting in the same value, which if today is the last day of January, then go ahead and add a 1. All right, so now that we have our up, down, and total number of Januaries defined, which is our count, and in fact, we probably want to rename this to something like Jan total count, something like that, just so it's easier to know exactly what it's keeping count of. So we'll say Jan total count. Now we can continue defining a few more variables. So one more that we might like to say plot in our label is what does the average move look like for the month of January? So that's to say what is the average of all of our Jan differences. And so there we might say Jan average difference. And here we could define this as something like total sum of Jan differences, which is going to take every single time we have the final day of the month, what is that difference value, add all of that up, and then we can divide that by our total number of Januaries, and that can then be closed out right there. And so that's now our average difference value. We can plot all of these in just a second to see what they look like for the S&P for the month of January. And I think that's pretty much all of the variables we'd like to define, or at least plot inside of our labels, at least to start off right now. So let's go ahead and define our label. So we can say something like add label. We'd like this to always plot, and we'd like the label to plot first with the month code. After the month code, we'd like to see how many times do we have an up month. And so there we can say something like plus as %. And now I can take our Jan up variable, divide that with our total number of Januaries, and that should give us the total percentage of times that we have an up month. And then to this, if we come back into our formatting, we'd like to add in a divider here. and then close that out. And here we can now go ahead and add in what is the average move of each of those months in January. So there we can say something like as percent, and now I can plot out Jan average difference, and then we can plot that, close this out, and then maybe we'll just plot this as a static color to start off first. So using that, we see inside of January, 60% of the months have been up months, and each of the average Januaries has resulted in a move that has been an open and close difference of about 2.83%, this time in the positive direction. So one other thing that we can now go ahead and do is if both of these numbers are above, say, 50% in this case, meaning there's more up months than down months, and this number on the right, the average move, is greater than 0, meaning the overall average percentage is positive, then we'd like the label to say plot green as a color instead of yellow. So let's go ahead and make that come true. So now if I delete this color.yellow, I can add in some Boolean conditions here. So we can say something like if our Jan up divided by Jan total count, and that is, we can say greater than 0.5. Yep, we'll say greater than, not greater than and equal to. And our average diff is greater than 0, then we'd like this color to be green, else we'd like the color to be, let's keep it at yellow. And I can also mute out the chart bubbles here. Click apply, click OK, click apply. And now we can see that this label is plotting green because we're above 50%, so 60% of the time, Januaries for the S&P 500 over the past 5 years have resulted in an up move where the open has been less than the close, meaning the close has been higher, and that average move or the average difference there has been 2.83%. So now let's go ahead and repeat this process for all of our remaining months. We can remove this add chart bubble code, and you'll see that by really keeping things kind of clean here with our month code, everything that we have which is referencing January has a Jan at the beginning, and the only thing I believe that we would have to change is changing this number to essentially be a 2 for February, so on and so forth. What we can then do is copy this, come into a text editor. I'm using something like Sublime, paste in this code. I can change this to be, say, February, and now all I do is press Control H here, replace all of our Januaries with February, replace all, and that will then give me all of this code, but now morphed for February. I change this number up here for get month is equal to 2, and then at the very bottom here, I'd also like to capitalize this, and now I can copy paste this in, come back to our indicator right here, and paste in that code. Let's click apply and see if this worked. So now February, we'll see 60% of the time we do still close up. However, the average percentage here, the average difference, is below 0, which then leads to this label plotting as yellow. And so now really our next exercise is repeating this process for February, March, April, all the way up through December, which I'll go ahead and do. I'll skip that portion of the tutorial, but that gives you an idea of how you can do this. So I'll repeat this one more time for, say, March, and then that should give you an idea of how to go about this. The rest is just a little bit of busy work and just copy and pasting over and over into the indicator page. So now let's go ahead and do March. So I'll say find all Februaries here, replace that with March, replace all. I need to change the get month to get month is equal to 3. And at the bottom here, we can change this to be a capital M, copy paste this into our indicator. So I'll come into the bottom, hit enter a handful of times. We can also fix the month right here to say March, and that's pretty much all there is to it. And so now if I click apply, you'll notice that there's March as well. So now let me go ahead, fast forward. I'll repeat this process for all of the months, and then we can come back in to close out the end of this tutorial. All right, so I just finished copying and pasting all of the code all the way up through December. So let me just scroll up to give you an idea. All of the month numbers are changed. The December down here is capitalized, but most of the code outside of that is pretty much the same over and over. And that's really the beauty of planning ahead and setting this up in a way where each of your variable names can be lifted and reused. Now, in terms of additions to add to the code, the one thing that I would like to add, which I know will invariably cause problems, is an alert message, which is that this only works on daily timeframes and higher. You'd like it to have access to actually these months data. More times than not, you're probably going to be expanding even beyond 5 years. And so using this on an intraday time frame chart is just not a useful way of using this. And so you'd like to say convey to your users that, hey, this indicator does not plot on an intraday time frame. So the way we do that is by using the assert function. And so we can start by saying something like assert, which is the built-in function. And the first portion of this is what is the condition that should be true for this variable to not really plot, or this text. And for us, that's, hey, if you're on a daily time frame chart or higher, then go ahead and plot this indicator. But if you're on anything less than the daily time frame, then go ahead and plot this error. So we can say something like get aggregation period is greater than or equal to, and we said we'd like it to be above the daily. And if that's not true, then plot something like seasonal analysis indicator only works on daily time frame and higher charts. Whoops, and I need to add in some parentheses here. And that should be it. So now if I click apply, okay, apply. On the daily time frame, we see the indicator plotting as we would expect. If I come into something like, say, a 1-minute time frame, you'll see the indicator stops plotting. And if I click that icon in the top left, you'll see it says the TI seasonal analysis indicator says that, hey, this indicator only works on the daily time frame and higher charts. And so that hopefully gives you an idea of how to also incorporate assert messages into your code anytime you are building your own indicator that's designed for a specific time frame chart and above or below, whichever way you'd like it.
I hope you found this tutorial to be useful in terms of understanding how to build your own thinkorswim tools, as well as actually having a useful seasonal analysis tool that you can start to use in your everyday trading. With the month of August right around the corner, actually today is the first day of August, you can now start to use this on your favorite markets, understand what does August look like on average for that particular market, and try and find places where you can take advantage of this trend. The place that you can try and take this further, you can use this code, layer on your favorite bullish or bearish signals in case you're looking to short as well, and try and pinpoint exact opportunities where you can start to participate in this overall seasonal tendency that tends to happen, and use specific triggers to try and actually get there. Some great starting points for our volatility box members. You may be using things like the edge signals or any one of our squeeze indicators. And if you don't have a volatility box membership, you could use things like the upper V-score indicator with the specific signals. You can use things like the simple breakout indicator. Really what we're looking for is some signal that gives us a bias one way or the other. We have seasonal tendencies to support that bias, and you can then take advantage of these overall trends. All right, once again, you can download this indicator for free using the link in the description box below. And if you have any questions, feel free to email us at contact@tosindicators.com. All right, take care, everyone. Good luck trading, and we'll see you in the next update.